My call for the end of 2025 is $250,000 of Bitcoin. Kind of gets a random number. It's a nice whole number, $250,000. So it sounds nice. We basically hit about 100,000 last year. So that's kind of where I'm at on sort of Bitcoin. At least you can protect your assets from inflation, protect your assets from the debasement of your national currency by holding crypto. And then obviously when you need to use fiat to pay your bills, use fiat to pay your bills, but at least you're protecting your savings.
Despite reaching a new all-time high near $108,000, Bitcoin has struggled to sustain momentum and is hovering around the $100,000 level. Hayes sees this as a potential warning sign. If yields continue rising, it could indicate an impending financial crisis, which might push Bitcoin down to a range between $70,000 and $80,000 before recovering. For investors with a long-term perspective, these dips could present buying opportunities. Hayes emphasizes that Bitcoin operates as the world's only truly free market, where anyone can participate and express their views on the global economy. As financial turbulence intensifies, Bitcoin's ability to withstand inflation and economic instability becomes more relevant than ever.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I don't know when the peak will be. I've actually turned a little bit more bearish recently, and that's mainly because of how I see the 10-year US Treasury trading. For whatever reason, a yield above 5% seems to cause financial dysfunction starting in the United States and in the global markets, for whatever reason. And we've seen as the Fed has started cutting rates in September of last year that the 10-year yield bottomed at about 3.6%. Now it's at, I think, like 4.7%. All the while the Fed is cutting rates. But inflation globally is quite sticky, especially in the United States. And I think that we're on the cusp of a mini bond riot where you're going to get yields above 5%. Somebody's going to blow up in the US financial system. I don't know who, I don't know when. But we know what the response is. The response is printed money. And so I think Bitcoin being the only free market in the world where anyone can participate and express their opinion about the future is telling us, by the way it's trading, yields are rising in the US and Bitcoin is sort of struggling a bit. I mean, it reached 108,000. We haven't really retaken that level. We're flirting with the $100,000 level. It looks a bit toppish to me. I think if rates continue rising, Bitcoin is going to tell us that there's some sort of financial disturbance coming. Obviously, if you are like me and you don't use a lot of leverage, it doesn't really matter because you know what the response is. The response is printed money. The response is, let's flood the world with dollars or euros or yen or whatever it is. And Bitcoin will trade much higher into the future, but we could experience some, short-term pain. That's what I sort of see coming. And, with my fund Maelstrom, we've raised a bit more US dollars and putting them in Athena, earning, very good yields on chain. But we're a bit light on our crypto risk. We're still net long, but we are lightening up our portfolio a bit. So I think if we get some sort of risk-off scenario and some sort of mini financial crisis driven by, plus 5% yields in the US 10-year Treasury, I think Bitcoin could trade in between 70 to 80,000, very briefly, and then make its way back up. My call for the end of 2025 is $250,000 of Bitcoin. Kind of gets a random number. It's a nice whole number, $250,000. So it sounds nice. We basically hit about 100,000 last year. So that's kind of where I'm at on sort of Bitcoin. On the altcoin space, obviously altcoins will follow as everyone with Bitcoin feels rich, then they go and they buy altcoins. And I don't have any specific targets on coins. Obviously, we're very bullish on Athena, which is probably one of our largest holding in our portfolio, and Aptos, which is our layer one bet. But again, that's just because we hold those in our portfolio. I think they'll do quite well into the end of the year. At least you can protect your assets from inflation, protect your assets from the debasement of your national currency by holding crypto. And then obviously when you need to use fiat to pay your bills, use fiat to pay your bills, but at least you're protecting your savings. So I think that everyone in crypto believes that they're the most important person in the world. They believe because they gave $1,000 or $100,000 or $1 million to a political action committee or this or that politician, that they're the most important thing. And therefore, their particular thing they need from a regulation is going to be enacted. And I think that has led this Trump's going to do a strategic Bitcoin reserve. He's going to liberate DeFi. He's going to do this. He's going to do that. And at the end of the day, Trump has a limited amount of political capital. And a lot of people have issues that they want him to solve. Crypto is obviously one of them. And so I think whatever crypto bill, if there one even materializes that comes out, is going to be a disappointment because it's going to be a series of compromises. And depending on when he decides he wants to push this legislation, it could be a good or bad time. Because if you look at his majority in the House, the Republican Party, they have a 1-seat majority in the House and a 3-seat majority in the Senate. It's razor thin. A few politicians in his own party could derail any sort of bill. And so I think because of the dynamics of what's going to happen in this sort of political landscape, people need to adjust their expectations down to, okay, maybe he says something positive. Maybe whatever bill comes out is actually not that great for the industry. It might be a step forward in that it's clear, but the rules might not be beneficial to you particularly just because you gave a little bit of money to the Trump campaign. So that's the sort of message I'm trying to get out there is, we got from $0 to $3 trillion in global market cap in crypto with no government support, no government regulatory clarity. Don't hang your hat on it now because it's up to mercurial politicians who have different agendas than you as a crypto holder.
Hayes explores a broader macroeconomic theme, which he calls I'm coming home. This refers to the trend of capital retreating from globalized investments back to domestic markets. Governments worldwide, particularly in Europe and the US, are in desperate need of capital to fund their growing debt burdens. As a result, policies may be introduced to restrict capital from flowing freely and instead mandate domestic investments. Europe, in particular, faces serious economic challenges. Hayes highlights that European energy costs are significantly higher than those in the US and China, making European industries less competitive.
And so I think at the end of the day, what blockchain technology has been able to do is democratize how you form capital. And we did this with ICOs. We've done this with sort of these, bootstrapped networks like Ethereum and other things. And so now we can bring it to scientific discoveries, right? A lot of science is locked in universities or government grant programs, which has its own types of politics that you have to play to get this money, the things that you're allowed to research and the things that you're not allowed to research. And so let's bring it to the market. What do we, the people globally, want to see advanced in terms of our knowledge of the universe, our knowledge of the human body, the types of products that are put forward, and that's where blockchain is uniquely suited to allow anyone with enough money to crowdfund and say, I want this looked at. Not necessarily going to mean it's going to be successful, but at least we're funding the things that we, the community, want funded versus what some guy in academia or a bureaucrat wants funded. AI are going to be their own silicon persons, whatever you want to call that, and they're going to have to interact on chain. I think that Bitcoin and blockchains are the native thing for a computer intelligence to interact with, and that is what they're going to do. And we're starting to see this with meme coins. Obviously, that's the most interesting thing right now, and it's cool, but they'll do financial services. They'll maybe create their own sort of bureaucracies themselves. We don't know. But the substrate is there. It's technological money for a technological intelligence. Times are very volatile. We've seen Bitcoin, go from $0 to however many trillions of dollars in market cap, but it's been, quite a bumpy ride. If you believe in this thesis of printed money, then at least make it so that you survive. Capital preservation is more important than capital appreciation. Unless you're a full-time trader where all you do is stare at a computer screen, I would say don't use that much leverage. Title of the presentation, I'm coming home, and it's reference to capital. So capital that has been deployed abroad is going to be coming home. And that could be in Europe, it could be America, it could be Japan, it could be China, right? All over the world. The globalization effort where capital could go where it was best treated. Obviously right now that's the American financial markets. The national governments all need that capital back home because they're all in debt and they need to fund their bond purchases. And so I use the EU as sort of a foil to discuss this because they're probably one of the most fucked economic blocks out there around. The first chart I showed in my presentation was a chart that Mario Draghi put up in the European Competitiveness Report from last, I think, September. And it showed the price of electricity per kilowatt hour in Europe, the EU, versus China and the US. And the EU pays something like 2 to 3 times more money per kilowatt hour for electricity, for energy, than China and the US. And so when energy costs you 2 to 3 times more than your competitors, of course your products are 2 to 3 times more expensive and your industry is less competitive. And that's why we're seeing, the European economic malaise, especially in Germany, where large manufacturers who produce iconic global brands cannot compete with China because China has cheap electricity, a great workforce, and produces the highest quality, lowest price goods in the world. And it's because they focused on generating energy in the cheapest way possible. The United States is blessed with lots of natural resources. And because of that, energy costs within the United States are quite affordable as well for their industry. And as such, Europe's caught in the middle where they basically cannot compete with the US or China. And then the next thing I pointed out was essentially the mind virus that is within the European political elite, which is they are allies of America, and America actively sabotages them by essentially cutting off their sources of cheap energy, aka Russia, and then forcing them to buy expensive US energy, aka LNG. And you're seeing this play out. There's rumors that the Biden administration greenlit the destruction of the Nord Stream pipeline that helps supply cheap Russian gas to Germany. And so essentially, and Trump has been very vocal that he wants Europe to buy even more US energy. And so caught between this rock and a hard place, Europe has chosen, okay, we're going to be allies with America and buy their expensive energy, but we still want to have a very expensive welfare state. Europeans want the benefits of being European, I get it, and you can't really mesh the two. So what do, they have to borrow money. And so I went through some ways in which I believe that capital will be restricted from investing in America. European capital will be made and mandated to invest in European companies, in European government bonds.
Hayes discusses the potential intersection between blockchain technology and artificial intelligence. He believes that AI entities will need a decentralized financial system to operate efficiently. Bitcoin and other blockchain networks provide the ideal infrastructure for AI-driven economies as they offer a transparent, trustless, and programmable financial layer. Currently, AI participation in crypto is mostly seen in meme coin trading. However, Hayes envisions a future where AI systems engage in more complex financial transactions, potentially creating their own bureaucratic structures.